Guys, 300 plus pips. We caught it. We ate. The team is eating out here, and I'm going to show you how. There's been a lot going on in GBP. We got, of course, the queen died. We've had some interest rates. We've had a lot of stuff happening. I'm going to talk about that in this video, and I'm going to show you how we use that momentum to catch a massive trade, actually several trades. We kind of scaled into it, and I'm going to show you how we did it. So today's video is going to be very valuable. You're going to see a lot of great content, a lot of really solid markups that are going to help you to really understand how to catch momentum in the market, okay? So if this brings you value, don't forget to like, comment, and subscribe. Make sure you hit that bell, get notified every time we drop content, because I want to make sure that you're getting everything, guys. You don't really want to get halfway. You want to get the whole thing. And I believe you can get a lot of that value right here in this channel. So we're about to get into that. Before we do, I got to roll this intro, and let's look at this disclaimer. I'll see you on the other side.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
Basically, we're looking at the GBP AUD 30-minute chart, and I'm going to show you how we caught this whole move right here. And look at this, guys. This is super solid. I mean, you come down here and you're looking. I mean, look at this. If you look at it from down here, it's 385 pips. We ate, and I'm gonna show you how. So when you look at a movement like this, you want to zoom out. I tell you that all the time. And so when you zoom out and you see like the bigger picture here, what are you seeing, right? If you were to do the top-down analysis, like 4-hour, 1 hour, 30-minute, 15-minute chart for your retest entries, like I teach you, then you would see like this is all 4-hour movement. And you would see like, look at this coming from the downside, and then it pushes down. And so really you're looking good, looking some really nice structure. You got the big push up here before the push down. But really the interesting thing is, once you get movement that starts to give you some like sideways supply and demand type movement, here's what we end up doing. When it gets to the top, we wait for structure. We wait for so we were looking at higher high, higher low, higher high. Now we get a lower low and a lower high. Once we do, we can literally just take that and then wait for the next low, right? And once that low comes, we just put a box on it. That's all we got to do. So that's the first thing, right? So you come in here, you get that box on there, and that's number one. The second thing is, once we see all this structure play out, we're seeing this happen. If you really spread that out a lot, number one, you're going to see some real solid structure in here. And what you're going to see is, look, if you look from here, from the top, come down here, you're going to see that, number one. And then from the bottom, you literally just come from the previous, right? Or you can come from here. Either one, it really doesn't matter which way you do it. One of the ways a lot of people like to trade is to split the difference, right? So here's the previous structure. And so you could come like that. Here's the high. We already have that. So what we would do is we would come from here in the middle, and we would literally just come and split the difference just like that, right? And so essentially what that does is it gives us the average from here. It lets us get that nice straight line right through here, and it shows us where structure is bouncing, right? So from here, we get a touch here, we get another touch here. And so we know that that's a true line in there. So here's what happens. As price is bouncing around all through here, here's what's interesting. Notice how when we broke the box, we had our box, it was moving across the bottom. So we know that now, once we've seen that start to move from the downside, we know that the bias is going to be bearish. And so we get the first little breakout. And what I tell my students a lot is that the first breakout is generally the fake out, right? So it'll come and it'll break out of an area. It'll give you a really nice push and it'll show you like, okay, this is about to happen, but then it'll come back in. And really what's happening there is you're getting, number one, you're taking the retail traders out. Number two, the banks are either gathering more supply or they're dumping off, right, at a demand area. And so what's happening is you're seeing another push before the imminent happens, right? And so that's what happens in this area right here. We see that fake out and then it comes back in and tests that high side and then gets the real breakout. Well, once we get this real breakout, of course, we get a breakout and then we get a retest. Now, here's what's interesting. I want to kind of zoom in a little bit and show you something here. What we saw was that we had news, okay? And if you were watching in the market, there was like a little thing down here that said news was coming. And what it was the BOE interest rates announcement, along with a lot of other financial news that happened in the same time. And so as price pushed up, it gave us the top wick. Then it pushed all the way down and gave us the bottom wick. And what that told us was that once the news was over, okay, then a correction had to take place. It's similar to when a gap forms in the market. Like you got to fill that gap. And the same thing happens when we have news. When an abnormal spike comes in the market, we have a correction that comes back and kind of gets back whatever volume was taken in that previous move. And so that's what happens here. But the problem is that announcement was very interesting. Now, I want you to notice something. That announcement, basically what they said was interest rates are problematic at least, right? At minimum, they're problematic. And their solution was that they were going to borrow to fix the problem. They were going to borrow to get out of debt. Well, obviously, that's not a very good plan. And so as that announcement kind of hit and other institutions that are doing business with them started to make their moves, well, guess what happened? We got our push down and it was a normal breakout. We got our retest. But then here's what happened is all this institutional money said, wait a minute, we're not going to allow you to use our money to borrow before, you're not going to borrow our money to just get more into debt, to get out of debt. That doesn't make sense. And so what happened was you got a big dump off. Okay. And so here's a situation where we already have the momentum because the fake out showed us where the breakout would be. Now, once that happened, we got our retest just like we would anticipate. And you would look here and you got a really nice doji candle for your entry. So this is all normal. So without the news, let's just say that the news never happened. We would call this the breakout. We would call this the retest. And we would call this the entry candle. And then we would get in and we would trade from there and we would be completely happy. But because of the news, we had this extra push and it was kind of like some indecision. It was like, wait a minute, are we really letting this happen? And so we had some volume here, some manipulation before the big move came. And once that happened, we saw this close below candle right here. And then price took off. But notice where this close below candle came. It came right to our channel line. So not only did we break the box, but we also got to our channel line, right? And so once we saw that, we knew we could get into the market. Once we saw that, we knew we were clear. We were ready to go to start looking at trades. And so what I did was I sent out a trade to my students and I said, at this level here, right here, I want to enter a sell, okay? And so what we did, now we don't generally just take a trade and stay in it for a long period of time. I used to swing trade a lot, but since a lot of the COVID and the election stuff, and I just really don't trust leaving my money in the market as much as I used to. So I like to scalp. And at longest, I like to day trade. And so what I've been doing with this one was we got in, and let me kind of zoom into it a little bit so you can see it. We got in, okay, right in that area right here. And if any of my students are on watching this video, comment below and let us know how many pips you caught, how much you ate off of this trade that I sent last week. And I want to, just talk about that. But when you look here, we got in, and look how easy that was, right? That wick right there, that little wick that you see, that's the breakout. It broke out, then it retested. Next candle opened, and just a nice drop. Really nice, easy drop, just off of some technicals. No, nothing super, nothing super fancy. But look at that. That's 103 pips. 100 pips. And look at that. That's in an hour. That's 1, 2 30-minute candles. So in 2 30-minute candles, we got 100 pips. That in and of itself is more than enough for you to eat. You don't really need more than 10 or 15 pips in the market to eat really good. So we got 100. And so for anybody who ate that night, that was really good. Then you had your pullback, and we could buy the dip. And when we're bullish, we call it buying the dip. When we're bearish, okay, what we're doing is we're selling the retracement, right? Selling the pullback. And so it drops down, it pulls back, and we either re-enter here, or we move our stop loss into profit, and we just continue to eat. Well, guess what? When we do that, guess what we do? We have our doji candle entry right there. Here's our entry, this candle. And look, we eat another 160. Let's just call it 150. We eat another 150. Then it starts to kind of tail off, all right? And so it's still dropping, it's still moving down, but now you're starting to see kind of like, instead of just strong moves down, we're seeing kind of like this odd type movement, which even that was another 150. So we ended up getting about 400 pips in the market this past week, all because we just watched this kind of stuff happen. And man, we've been eating. Now, once we ate off of all of that, now this is really beautiful because look, this is all happening. This is the US session that this is happening in. All right. And so this is real nice stuff going on. But then something else happens, and this is where it gets super interesting. Watch this. Look at this candle. Bro, look at this candle. We just saw one candle, 500 plus pips. Now, no, we did not catch that. Now, if you did catch that, you got lucky, okay? Because that was really an unanticipated move. And what that was is all of this is residual from this. All of this is a residual from this announcement. Between the Queen's death, between some changes in leadership, between the interest rates and the plan to borrow to get out of debt, GBP is falling to, I think it's like a 28-year low. Like, it's unbelievable how low we are right now on GBP. And we're eating real good on that. But there's really no end in sight, because until we have a better plan in place than to borrow to get out of debt, GBP does not look real solid. So I do anticipate some more down movement, but every fundamental thing that happens, every news event, everything that happens in the market always has to come back to technicals. It always comes back to technicals. And so that's what we're going to talk about. I want to talk about what happened right here and how do we capitalize on that. All right, guys, there you have it. I hope that brought you a lot of value, showing you how we really just use technicals and then use the momentum of fundamentals. We didn't, just rely on news, or we didn't just rely on technicals. You got to be a balanced trader. And, I didn't show you any indicators on the chart. I didn't go and use an RSI or a moving average. None of that. All I did was just use simple, very, very simple technical analysis to show you where breakouts would happen at structure levels, and then using the momentum of the currency to take us where we want to go. That's how banks trade. That's how I trade. And that's how you should trade. Stay tuned for this next video. It's going to be fire. Make sure you comment below. Let me know what you thought about this one. Don't forget to like, comment, and subscribe. And I'll see you in the next video. Peace.